Good morning, everyone, and welcome once again to Weekly Profit Talk. We do this every single week, hence the weekly. Uh, the time and date is Wednesday at 8:30 a.m. Mountain Time, be that daylight or standard. And won't it be nice if we might be stopping changing the clocks this year? That would be amazing. So in any event, every single Wednesday, we sit and we talk about how to make your physician practice more profitable, as well as some things you can do about taxes. And that touches on the topic for this week. That topic is 5 signs that you've outgrown a tax-only relationship. And without any further ado, let us begin. So, the relationship that you never really negotiated is what I've titled this first one. And it's simply because of this. You basically have started a practice. Somehow you figured out, one way or another, somebody to do your taxes for you. This is probably an annual trip to the dentist type relationship where it just basically gives somebody a bunch of inputs sometime in the winter, February, March. You may or may not have a business return. You should. We could talk about that another time, but in any event, you certainly are going to have a Form 1040 to file because everybody that makes money has to file taxes. So, and a definition of that is if you make more money than the standard deduction, then you got to file tax return. Standard deduction for even marrieds now is like 33,500 or something along those lines. So, as a physician, you're certainly in that position. A frustrating part about outgrowing your professional relationship is that nobody's really sending you a notice. It's one of those things that sneaks up on you, you know, kind of like a foot fungus. It's not bothering you, and then all of a sudden it's there, right? So you just keep operating at the old altitude and assume the air is still fine up there, but it rarely is. Let's explore the 5 signs that the altitude changed and the relationship didn't change with it, okay? So first one. Your accountant knows what happened. You need someone to know what's next. And I've discussed this in previous weeks. Hopefully, you're returning viewer. Um, we are constantly on the topic of a tax accountant basically filling out a return for you as a historian. They're telling you what happened in the past. For success in your practice, you really need to focus more on the present and the future. And that's one of the things that we're talking about here. It's really an underlying theme. You need someone who knows what's next. A tax-only relationship is built entirely in the rearview mirror. You get a return, a bill, and a cheerful, we'll see you next year, right? Nobody's asked you what next quarter looks like or if your owner compensation is right for your current volume of income. What do I mean by that? If you've elected to be an S corporation, you are required to take reasonable compensation. That means a salary from your business. That salary needs to be the lesser of around half of all the money you make, or if you're sufficiently affluent in your practice, enough to um, replace yourself with somebody of equal qualification. So let's say you're some kind of neurological specialist and you're worth $360,000 a year. Well, if you make a couple $1 million a year, the IRS isn't expecting you to pay yourself more than that 360K. That sounds pretty good, right? Um, and on the face of it, that's basically only about 18% of all the money you're making. All that remaining money, you don't pay any Medicare tax on, and Social Security is capped at around $180,000 anyway. But that's why you want to be an S corporation if you're making that kind of money, because you essentially take reasonable compensation, and the rest of it is taxed only at ordinary income tax rates. And there's huge, huge savings in that. That's basically how we started our practice. And I'm going to talk to you more about how to work with us at the end here. So, nobody has asked you what the next quarter looks like, how your compensation is doing. You don't, your practice doesn't need a historian recording what already happened. It really needs a navigator deciding what's going to happen next. Two, you've made a five-figure decision without calling anyone first. Um, how often have you decided, um, after some contemplation, well, we absolutely have to have this piece of diagnostic or imaging equipment in our office because it's going to increase the volume of our practice. But have you sat down and crunched the numbers on that cost, whether or not to purchase the equipment or lease it, how to depreciate it, whether to bonus depreciate it or do it over time. Generally, diagnostic equipment has a 5-year life. Um, have you thought about any of that stuff before you bought that X-ray machine? No? Let me go on here. You made the call, signed the paperwork, and you moved forward on your instinct. The problem was never that you made the decision. Problem is that nobody with financial visibility was there with you when you made it. And that's an expensive way to fly blind, one signature at a time. Number three, what's my number requires extra mental calories. Practice Profit lives in one piece of software. Personal Draw lives in your bank app. And we're going to touch on something that I've talked about in previous weeks here. I call it bank balance accounting. You need money, you take a look at your operating checking account and say, oh, look, $5,000. So you just take 1,000 out. Are you thinking about the upcoming overheads that you might have in the near future? When's your next payroll coming out? $5,000 isn't a whole lot of money in a operating checking account, by the way, especially for a practice with multiple providers. Let me tell you that if you're not carrying about a month's worth of expenses as a daily balance in your checking account, you're asking for trouble because you're going to end up short. You're going to end up with non-sufficient fund penalties. It's no way to run a railroad. Don't ever pay a penny more to other people than you absolutely have to. And that includes the IRS and the state that you live in. Your tax liability lives somewhere in your accountant's head, unconfirmed until tax season. If reconciling this into one honest number takes you an entire evening and a stiff drink or three, that's not a bookkeeping inconvenience. That's a missing CFO wearing bookkeeper clothes, okay? Four, tax season is the only time you talk and it still surprises you. If a clean filing season still produces a number that makes you sit down to process the rude shock, the surprise isn't the real defect. And what I mean by rude shock is this. If your tax preparer finishes a return for you, presents you with his bill, and then tells you that you owe the IRS over $1,000, and has this happened to you? I mean, you may have paid 12, 15, even $20,000 in tax last year. If you didn't have it in cash, you might have had to do an installment agreement or just basically paid what you could and let the IRS send you nasty grams in those number 10 window envelopes. So no way to run a railroad. If you're in that situation, you are paying them extra money. Let me say that again. If you owe the IRS after April 15th, you're paying them extra money. It's called failure to file penalties, and they charge interest every single month. Okay. Surprises are simply what happens when nobody's checking in until the deadline forces the conversation. A once-a-year relationship has no early warning system. It only has an ending, and not a very nice one either. Number five, you've said, I should probably look into that more than once this year. Retirement plan structure, entity election. And we were talking about S corporation. That's what that means. Cash flow forecasting, a KPI you read about once and meant to start tracking. And that is a key performance indicator, by the way, which isn't necessarily financial, but it's a number that, and you've got several of them in your practice. The big one is revenue per patient. That is a ratio that everybody should know. How much money per patient you're making is basically a division quotient. The amount of money you're making divided by the number of patients you saw in a period of time. Whatever tops your list, it's still there because the tax-only relationship has no mechanism for actually working it. Nobody's job is to chase that list down. It's simply yours indefinitely, like a gym membership you keep meaning to use. Now, what the scorecard actually means. Did you go over this and count at least two of those were true for you at some point last year? Chances are pretty good they were. It's proof that your practice has grown past the scope of the relationship you built years ago, back when good enough was actually still good enough. The good news is that this is entirely fixable and faster than you'd expect. Now, let me tell you about a fractional CFO relationship, and this is where what I do comes in because it's basically what I am, your friendly fractional CFO. Forward-looking guidance instead of a rear view mirror. You're working with somebody all the time, okay? In fact, at certain levels, You're even having weekly conversations with your financial guy. And this can be 15 to 30 minutes a week, not terribly burdensome on your busy schedule. A seat at the table before the 5-year decision gets made. This is huge. You should be making scenario-based decisions on large capital investments. You should be. One honest number instead of three logins to find out anything. Financial check-ins that happen year-round instead of once in April. A running list that gets worked all year instead of just hoped and wished over. So, um, if you feel like you've outgrown a tax-only relationship, let's talk about that. You've already done the hard part. You've gone through this with me over the last several minutes, counted the signs, and you know where you land. So the only question left is whether you keep flying at the old altitude. And hang on a second here. There we go. I'm sorry. Yeah, let me get a good close look at you. Okay. So um, the only question left is whether you keep flying at that same altitude or finally get instruments that match how far your practice has actually climbed. Nice allegory, right? A 15 to 30-minute conversation with me is usually enough to find out what you've been missing. And that first conversation is always free. Let's talk about what that can look like for your practice. So, finally, if you're watching me right now, quite likely on replay, maybe live. You're on one of three media, either YouTube, LinkedIn, or of course Facebook. And they all have comments capability in common. So if you pop more info or let's talk or help with an exclamation point, uh, or a crazy guy emoji, whatever it takes, we'll get back to you within one business day and let you know exactly how to book that free call and have that conversation. So why don't we do that? Because honestly, if you're paying over $1,000 in tax a year, whether or not you're remembering to make your estimated taxes, um, you need to be planning taxes as a year-round event. Ideally, you should have a tax savings account, and this is a personal account that you should be putting aside money into each month and every estimated tax payment deadline, making payments out of to the IRS and possibly the state that you live in as well. I'm in Colorado, and they have the same penalty of if you owe over $1,000 at the end of the year, then you're going to be penalized for underpayment. And they calculate it very similarly. The IRS has a whole complicated schedule called Form 2210. Look that up sometime. It'll cross your eyes. Do not pay the IRS a penny more than they're worth. I don't like the way they spend the money. You shouldn't either. So, with that, I look forward to talking to you soon. And along with that, let me wish you a happy rest of your Wednesday, an awesome rest of your week. Try to stay cool in this heat wave you're having. I don't know where you are, but it's over 90 degrees every day, and I live in the mountains, so I can just imagine. I've got friends that live in the South in Florida, and be safe out there, please. So, and if you have a chance today, do something randomly kind for a stranger. So until next week, so long, when we will see you for weekly Profit Talk Wednesday at 8:30.